Hi, everybody, and welcome to the PlantStock channel. Today, I have a very special guest. I have Zac Hartley from the Zac Hartley channel, I guess we would call it, right?
Yeah, something like that. How you doing, Jesse? Thanks for having me on today.
Thank you. Thank you. Really great to have you here. So, first of all, I thought we could just quickly show your channel here. So, this is Zac Hartley. He's been doing this for over a year and he's reaching 30,000 subscribers soon. So, my understanding, Zac, you basically talk about most things when it comes to investment and stocks. Am I right?
Yeah, definitely right there. My focus is on basically investing in general. So I talk about primarily stocks and specifically the trades that I'm making. I also talk a lot about options. I talk about real estate investing, building your credit. I have a couple of videos about cryptocurrency. And so my channel is primarily geared towards investing as a whole.
Yeah.
I would say stocks probably make up the majority of the content, but there's always a couple new strategies on there. I sold a domain this year, and I did pretty well on that. So I like to talk about the different ways that I'm making money, but investing in general is the thesis behind the channel, and it's just my name, exactly like you said, Zac Hartley, and anybody can find it on YouTube.
Nice. And you're based in Canada, if I'm not mistaken.
Yeah, I'm based in Calgary, Alberta, Canada. So I'm on the western side of Canada, just kind of above Montana, right where the Calgary Flames play, if you watch hockey at all. And so I'm based in Calgary, Alberta. I'm born and raised here. I went to university at Mount Royal University and I got a business degree and graduated in 2016. And
Nice.
then when I graduated, I started a business and I ran that business for about 3 years. And then we sold it and I did a little bit of traveling and then came back when COVID hit. And COVID basically put me into a lockdown here in Canada. And so I had a little bit of change in my pocket at the time, and I was doing sort of my own investing and my own analysis and research sitting here at my computer. And I thought, geez, I wonder if anybody else wants to see this, if anybody else wants to see what I'm doing, and if they want to see the research and the due diligence that I'm doing on these companies. And so to kind of share that analysis that I was already doing, I started the YouTube channel and I just kind of walked people through what I was doing, how I was looking at companies, and the trades that I was making. And over the last year and a half, it has exceeded my expectations beyond my wildest dreams. It has really kind of started to grow a YouTube channel, exactly like you said, 30,000 subscribers. And then I also run a Discord chat. And now I have a course that's completely free for people that sign up with
Yeah.
Skillshare. They can go
I'll,
through my entire investing course.
yeah, this is his webpage here. So, Hartley Trading, right? We have your mission statement here to provide you with tools, resources, and knowledge to make responsible investment decisions and build your wealth. So if you want to talk more about this, well, yeah. So you offer free courses here, right?
Yeah, so it's kind of cool. So I put together basically 9 hours that walk somebody through start to finish exactly everything they need to know about getting started in the stock market. And
Yeah.
then I use the Skillshare platform. It's kind of like the Netflix of coursework. So
Whoa.
you pay a monthly subscription and you get access to all of these courses. And so I put my courses up on that platform and everybody gets a 2 week free trial whenever they use the link in the description to my videos.
Yeah.
And if you can do the course in 2 weeks, you get the entire thing for free if you cancel your subscription. So I try to give away the knowledge and the content for free so that nobody has to pay $1,000 for a course. And that way it builds a little bit of trust. It builds a little bit of authenticity and it kind of builds up the following on YouTube as well. So I try to build everything up together.
Yeah.
And if you can do the courses in under 2 weeks, it's completely free, which is kind of cool.
Well, that's amazing because I think I've also seen, I haven't actually watched them, but I've seen you make videos about some other popular YouTubers out there and what kind of courses they have and what it costs and is it worth it? I'm guessing that's what you're talking about. And I've actually been in contact with, don't have to name anyone, but some of the more really big ones. And I've had people contact me and saying, "Oh, you want to learn about investment?" And like, okay, and then it's like $10,000, and you'll be part of this for 6 months. And I'm like, $10,000? Like, yeah, are you kidding me? It's like, well, we're a great team here, and I'm sure they are. And but I just felt like, well, if I could like 5x or 10x that's $10,000, I don't feel like I'm just gonna put that at. I'll have to learn myself or find people like you then that offer more reasonable things, like in my eyes anyways.
Yeah, it's definitely a pretty crazy world out there when it comes to things people are selling online. But yeah, that's exactly what I'm doing. Is so I kind of put out my course for free, and then what I'm doing is I've made a YouTube video series where I'm going out and buying popular YouTubers, stock market, and investing courses.
Yeah.
I'm taking the entire course, and then I'm kind of comparing them and rating them.
Right.
And the idea behind that is I'm not trying to bust anybody or expose anybody. The goal with it is to really just look at other YouTubers that are doing well and that are focused on investing and just kind of evaluate the course and see where can I improve my content, where can I improve my course.
Yeah.
And a lot of them have different styles. Some of them are day traders, some are long-term investors, some of it's really technical. And so the goal with it is to kind of show people what's inside of that course in an overall summary so they can choose the best course that will fit their lifestyle. I've done Daniel Pronk's course and I've done Ricky Gutierrez's course. They're completely different courses.
Right.
And so I'm doing this series to one, improve my knowledge and improve my content. And then number two is help people identify where they can get the best resources and knowledge from.
All right. So I'm guessing then that you're paying that from your own pocket. And
Yeah.
yeah, so that's really putting in an effort, right? When you're using your own money there. Love that.
Yeah, I think I'm at 5 courses now, and I started out with the cheaper ones around $100, but I just paid, I want to say $400 or $500 for Meet Kevin's stock market and investing course, and I'm
Yeah.
doing Humble Traders subscription right now for about $100 per month. And then up next is Umar Ashraf from Stock Market Labs. That one's about 2,500 US dollars.
Yeah.
And then the finale will probably be Ross Cameron's Warrior Pro program, and
Right.
that one's about $5,000 US. So
Yeah.
yeah, overall, I'm probably going to spend $10,000 to $12,000 on the project, but I am learning a couple things for myself, so that's beneficial. Hopefully, I'm helping some other people, so that's beneficial. YouTube pays me a little bit of money,
Yeah.
and at the end of it, hopefully, my content gets better as well.
Well, luckily, for every 1,000 views we get paid from YouTube so much money, so it's so worth it, right?
For sure, it doesn't pay me back right away, but I think in the long run, it'll be definitely a worthwhile investment.
Yeah, yeah, yeah. I was a little sarcastic with a lot of people. I'm not sure about in Canada, but here in Sweden, anyways. Per 1,000 views, everything between $3 to $9 maybe. So it's. I think a lot of people misunderstand YouTubers when you're part of the YouTube program, anyways, the partner program, that you get so much money. I have kids. I'm a teacher, so a full-time teacher, and my students, when I was like monetized like a couple of months ago, they're like, whoa. And I'm like, yeah, well, I'm making maybe, I don't know, 40-50 bucks a week. And they're like, 40-50 bucks, well, that's amazing. And I'm like, well, I put in like 30 hours a week, so I'm not sure. That's probably the lowest pay I've ever had. It's like,
yeah, it's a crazy spectrum because, like you said, at 1,000 or 5,000 subscribers, like you're not making any kind of good money on it. You're
yeah,
not paying your bills. You're not doing anything. But once you can start to get 25, 50, 100,000 subscribers, then it definitely starts to work out. I think I'm right around that $8 to $9 per 1,000 views right now.
yeah,
And most of my videos only get a couple thousand views, but I get the odd video that gets 100,000 views
yeah.
and
I
pays for
saw
the rest
that.
of them.
Wow, that's amazing.
So yeah, it's a tricky game. I think the big thing for people like myself and you is consistency and continually putting out value that people can rely on, people
Yeah,
can look at, and they can learn something from. So
yeah.
that's what I try to focus on.
Yeah, I think the smart thing about your channel is that you are very varied, right? You're really talking about a lot of different companies and things. And I'm right now, anyways, in a niche. And even though there's plenty of companies now, I could probably talk about 30 or 40 companies, but I actually just focus on the ones that I feel I understand the most right now. And then, slowly, ever so gently, I'll move on talking about them too. But yeah, I think both, I think, have their value. If you're in a niche or if you're talking more general, I think, depending, but I think you'll probably grow more as someone who has more variation on a channel for sure.
Yeah, I think it just comes down to finding the audience that you're trying to speak to and making sure that you provide them value. Because if you're the absolute number one best resource for plant-based stocks, then I guarantee you that there's an audience of 100,000 or 200,000 people that would subscribe to that.
Yeah.
But if the audience is larger than that and it's investing in general, then you can be a little guy like me and still kind of scrape away at it. So it
Yeah.
all kind of just depends on it. But you're right. And the other thing is how popular is the plant-based industry at the time, and it changes from year to year and month to
Yeah.
month. So that trend probably has a huge impact on your success as well.
Yeah, I think it's still a baby right now. It's an infant. I think in a couple of years from now, I do imagine that it's going to be really large. And well, that's part of my mission statement anyway. So I guess I have to believe that. But I do believe that personally. I really do. But you having soon 30,000, I don't think that's very little, compared. So I think you're well on your way here. Definitely, definitely. But I thought if we move on then to just talking a little more about your investing philosophy. So and it seemed like you do a little of everything. But what's your main focus? Is it
Yeah.
like long
So
term or?
good question. I do a little bit of both. Living here in Canada, we have some very nice tax advantaged accounts called the tax-free savings account and the registered retirement savings plan. So they give me tax advantages on the capital gains as well as the contributions. So
Nice.
I take advantage of those accounts, and those are my long-term accounts that I invest for long-term growth in.
Mm.
And then I also have my margin accounts and my crypto accounts, and in those accounts I primarily do swing trading. That's kind of my bread and butter.
Right.
On big days, big events, earnings weeks like this, I will definitely get into the day trading a little bit.
Right.
But I am not at the computer each and every morning at market open ready to day trade. Most of my trades probably average between 3 days to 2 weeks is probably my average hold period, somewhere in there.
Right. All right. So
And yeah.
how would you say? Normally, we preach long-term investing on this channel, but I am getting more and more interested in different variations. But what would you say your success when it comes to swing trading and day trading?
Yeah. So when it comes to swing trading and day trading, I only stick to things that I know and that I'm familiar with, and I
Mm.
understand the company, and I have a good understanding of what's going on. So I kind of stick to specific niches and areas, one of them being food, one of them being technology, one of them being graphene, psychedelics. Those are kind of areas that I like to play in. And
Yeah.
I don't play a whole lot in kind of industrials or in oil and gas. I don't play a whole lot in tobacco. I don't play in a couple of those areas, but I do like to focus on the companies that I believe in long term, that I like, and then I follow those companies consistently, and I look for buying and selling opportunities based on the trends that I'm seeing, the fundamental analysis, and then the technical analysis for buying and selling opportunities.
So okay.
So try to
So,
focus on the big picture and then narrow it in.
so does that mean that you maybe go both long-term and short-term on the same company? That you play both fields?
I very rarely go short. It's not a huge part of my strategy. I'm not a short seller. I'm usually looking for buying and long opportunities.
Hmm.
But I will take shorting opportunities if I can identify a trend that's going on within the market.
Yeah.
And then within that trend, I will look at the industry. And if there is somebody that I think, or a stock within that industry that I think is just poorly managed and going in the wrong direction,
Hmm.
and then I see the technicals line up for a shorting opportunity, then I will take those shorting trades.
Hmm.
But I would not say that those are the opportunities that I'm trying to identify and look for on a regular basis.
Yeah. Well, soon we're going to talk about the very good food company, right? And part of me there sometimes, not that I have sleepless nights, but I went in at a good price there. I think in October when it was around $2. I went in, I think about what would it be, like 10,000 American dollars, and it quite quickly went up to $9 Canadian dollars. So from 2 to 9 there, and today still I'm like, yes, I'm long term. Yes, that's part of my philosophy. But that was such an obvious one that it was getting so hyped. So I just felt like today I feel like at least 30% I could shave it off and just relax with that money for a while, and then reinvest again at the better price. Even though I don't believe in predicting the market, but I do, like you said, when you are familiar with a company and you understand it and you see the way it gets hyped over and over again at times, I just felt like such an obvious today. And the same with, I don't know how familiar you are with Beyond Meat, but in January they spiked like crazy. It went up like 40% in a few minutes when they got the PepsiCo deal. And I was looking at it like this, and I didn't do anything. And I'm like, come on, at 40% in a couple of minutes, it's going to fly down quite quickly again. And as we know, it really did. So
Yeah, and you nailed it on the head there because I went out to a very good butcher's shop in Victoria, and I
yeah.
had a burger at their location. I want to say about a month after they IPO'd,
Mm.
and they were completely consolidating. They were trading sideways at like, what were they? I got it on my chart. They were trading sideways at like $1.25
Yeah.
to $1.50
Yeah, I
at the
remember.
time that I went and got the burger. And I remember doing the math in my head and thinking, you know what, this company's like a little bit expensive right now at $1.30, $1.50. And it was like two financial reports ago, so they hadn't seen that major growth. But
Yeah.
back then it was like these multiples are still like a little bit pricey back then. And I took a really small position in it and I kind of built into it. And you were right. The stock ran up from like it IPO'd at 25 cents or something. And then it ran up all the way to a high of $9.50. And exactly what you said. It's like, there's no way that the company itself just got 9 times better.
No.
So this is the market just kind of overpricing it and overpaying for it and overbuying it and hyping it up, because back at $1.50, it was fairly expensive when you looked at the comparables. Now it's at $9. So I got really lucky on this one, actually. On the day, what day was it right here? On December 11th, they had a massive dip from the high.
Yeah.
It got bopped up. And the next day it opened at roughly the same level, and I sold out that day. And then it dropped from there. So I got out of very good food at like just under $9, and then I'm kind of looking to get back into it now. But um, it's a crazy thing because the market isn't right. Like
No.
a lot of the time, the market price is not a fair or accurate price for that company, and especially when there's no earnings, it becomes excruciatingly difficult to value these companies.
Yeah.
And so a lot of it just comes down to, what is the market willing to pay for that kind of growth right now?
Right.
And when a bunch of big YouTubers and a couple of other people start talking about it,
Yeah.
the price can move pretty dramatically, and I think that's what we saw.
Yeah, I remember I think in November when I was had a couple of hundred subscribers. I got like critique from one or two people like, "Oh, you're hyping the stock like crazy, and you have to take responsibility for people's pensions and things like that." And I resonate with that. I believe in that, But I just felt like, well, you can't really compare me to Jeremy, because Jeremy, when he started talking about it, that's when it started flying up like crazy. I mean, it's not only about Jeremy, right? Because he has these millionaire club around him, right? That probably moves things, every time he's chosen a stock, right? And if they all together with Jeremy goes in with a small company like that, obviously it's going to move it. I'm not saying that was the only thing that was happening, but I think that could be part of it.
Oh, I think that's a major part of it, and
Yeah.
especially like you said, in a small company like this, when you can start to get attention like that, you first of all have so much broader access to the markets now through Robinhood and Webull and applications like that.
Mm.
And then the ability to translate your knowledge on YouTube has completely changed how people research stocks and do their investing. And so I think just over the last kind of 2 years, we've seen the full impact of that. And I think this example of how strong some people can be in the markets is just phenomenal. And
Yeah.
like, I mean, we see it every day with Elon Musk and Bitcoin. These markets are fairly manipulated based on hype. And so as a trader or investor, being able to understand most importantly probably is when is a company overpriced and to just wait it out. That's probably one of the most important skills you could have as an investor in the current day and age, especially as a retail
But
investor.
but but don't forget what Elon said. I thought that was one of the best quotes I've heard from him in a long time. Like, I may pump, but I don't dump. Like, it's like, so so no,
Yeah,
but
and fairness to him, it doesn't look like he sold a lot. I know they had to sell a little bit to prove liquidity there,
yeah,
but like, and we just saw over the last week. I mean, if Amazon started to accept Bitcoin and cryptocurrencies, and Tesla opens that up again, and let's say Facebook allows you to pay for advertisements with crypto,
yeah.
holy cow! Here we've got a pretty dramatic shift coming. So it's going to be a very very interesting
Well,
world in
I
crypto.
wasn't
But
planning
I
to
know,
talk about crypto, but since we do it,
yeah.
I am actually interested in it. And I've been watching it now like crazy in the last couple of months when it went down to, it's been down to what, 27, $28, or has it been lower even the last couple of months? Something, but
Uh,
around,
I know Bitcoin dropped below 30,000
yeah,
about 8 days ago. It
yeah.
spiked up to 40,000 yesterday, and we're currently trading around 38,000 USD.
Yeah, that
So,
actually makes me a little bananas because I've been following it since it was around 60. It was up to like 58, 60 at one point, right? Or even higher, maybe. And
yep.
I have a Filipino friend who's a doctor who actually now lives in Canada, in Vancouver, and he's been trading with crypto for, I don't know, 6 7 years, and he has been actually living off it for 1 year. Tried to do that, and it's been doing quite well. But obviously, it was a shock for him when it went up that much. When it went, what was it, after Christmas, from like 10,000 or 11,000 up to, yeah, basically 50 60 in just a few months. And he is very bullish about them, and he's made his case for me, and I made my case about Tesla for him, because we were like, all right, it's interesting how we're like both connecting Elon and crypto and the way we're interested in it. And everything I've heard about, what Kathy Wood from ARK Invest, what she talks about crypto, and Jack Dorsey from Twitter and Square. I'm invested both in Tesla and in Square. And for me, I resonate with their views when it comes to it. Maybe in 10 years from now or longer, it could be one of the biggest things when it comes to being some form of currency for the world. It resonates with me also, this whole idea that we saw it with Tesla, and we've seen it with a lot of other companies now, that they put some of their cash balance into crypto, and some companies actually put the whole thing in there. What's it called? Micro, it's a company that went in basically all in. I don't remember the name though, but I do see a bull case there too, that more and more companies will follow that way. They will follow lead when it comes to Elon Musk and other leaders out there. So I do imagine that if they put 10% or 5% of their cash balance uh, within the next 5 to 10 years, that's going to be huge.
Yeah, I agree. And that's like, I see it as kind of two major factors there. Is number one is, will companies accept cryptocurrency and will they hold it on their balance sheet? Because if they do, and let's say the S&P 500, everybody there holds 5 or 10% in cryptocurrency,
Yeah,
that completely changes the market. And then the other side of that, though, is the government regulations. If you look at what's happening in China right now, that they're pretty much outlawing Bitcoin, and they're implementing their own kind of central bank digital currency
yeah,
to sort of replace that. And so far, it looks like they're having success with it, and I expect that to roll out. But for instance, if we did that in the United States, it would decimate a lot of banking and transaction type companies. So it's a really interesting dynamic of, will these public companies accept it and hold it? And will the governments allow it or regulate and replace it?
right.
And so two kind of dynamics are going head to head right now. And I think that battle or power shift is going to continue over the next year. And so that's what I'm watching for really closely.
Yeah.
But Bitcoin breaks above 40,000, that would be a positive sign in my eyes, and I might add a little bit more.
So if one should start investing, so around 40 is a good time to start.
Well, what I see here in the chart is that the price fell from $62,000 USD, and it came all the way down to $30,000, and that happened basically about 2/3 of the way into May. And then since then, the price has been trading between 40,000 and 30,000 since the middle of May there. But every time it comes down to 30,000, it seems to bounce off, and people seem to buy it up at 30,000.
Yeah.
And in the middle of June, it got back up to 40,000 and people sold off.
Yeah.
And so the price came back down. And then yesterday, actually, the price got back up to 40,000 again and people sold off and it fell down below 37. So it seems to be trading in this channel where people are buying at 30 and selling at 40.
Right.
And so I would like to break through that 40 level because it means that all the sellers have been taken out. So that's what I'm personally watching for, and that's just basic supply and demand,
Yeah.
which is actually the really nice side of cryptocurrency and Bitcoin is that everything is strictly supply and demand. There's very little, like there's no press releases coming out of Bitcoin. There's no news releases or earnings coming out of Bitcoin. So it really comes down to the most basic supply and demand factors and a little bit of Elon tweeting. So,
but that's the thing. Also, I never understood that when a couple of months ago I was reading more and more about crypto, and I remember Meet Kevin made a great video about it a couple of months ago. That because yes, there's a lot of volatility there. But again, if you're long term or you're playing the game, that's one thing. But if you're long term, sometimes I don't understand why people get so nervous because, I mean, Bitcoin, I don't think it's going anywhere, right? It's not like it's likely in the next couple of years going to go bankrupt. So why people panic sell that much, for me, isn't understandable, to be honest. And when you have great minds like Cathie Wood, Jack Dorsey, Elon Musk talking about this as much as they do, doing their due diligence, especially ARK Invest, right? I don't understand why you don't see the confidence there. I mean, you can. It's all there, right? You can go into ARK Invest and read their details why they believe this to be the future. And I would question anyone having much more information than them, because I mean, when it comes to Wall Street, they don't really do any due diligence comparatively to ARK Invest, in my eyes, anyways. But that might be another story. It's like.
Yeah, when you have the people, the smartest people that we think are out there, especially in the U.S., supporting something as much as Elon and Jack and Cathie do, it's tough to bet against it. But it's a really interesting thing because as of like if you measured it a week ago, Bitcoin was down by 50% from the highs.
Yeah.
So. Yeah, it really depends on your personal investment style because if you compare it to a year ago, we're still doing extremely well. I think we're up by 50%. If you compare it to 3 months ago, we're down by 50%. So it really comes down to your personal investing outlook.
Yeah.
And I think that's one thing that new investors or somebody getting into the market really needs to figure out for themselves is, are you buying this long term or are you buying it short term? Are you buying it for the growth or are you buying it for the dividend and the cash flow?
Yeah.
And if you're short term on it, what's your entry and what's your exit? And like those are just the most basic things, but I think people get very, very confused. If you're a long term investor, like you shouldn't be considering selling that thing for 2 to 3 years because that's how long it's going to take for your theory and your hypothesis of this is a good company to work out and play out, because that's how long it takes to report and actually put some numbers on the board.
Exactly. And but I don't know. I just agree totally with if it is that Warren Buffett's talked about this, and there's a lot of other. I think Ray Dalio's talked about it too. That in the end, I mean, intelligence is power, right? Knowledge is power. But in the end, as an investor, sometimes just having a strong stomach is more worth all the intelligence in the world, right? All that's my experience, anyways. Because I noticed when it comes to a lot of the companies I'm invested in, people around me panicked like crazy, especially with Tesla, but also the plant-based scene. They sell out like crazy, and they're making a lot of losses out there. But I don't know. I have issues with stress, but not when it comes to my investments. I'm like dead inside or something. No matter what happens there.
And I think Warren Buffett has this quote. I don't know if he came up with it or if he took it from somebody, but it simplifies things the best way possible. He looks at his investments as if throughout his entire life he has a punch card and he's got 20 punches on it, like when you used to go get milk or whatever. And every time you buy a stock, it's one punch. And so you only get to buy 20 stocks throughout your life. And if that was the case, you'd be damn sure that you picked the best companies that you knew you could hold for the rest of your life. And I think, like, if you're a long-term investor, that is the only philosophy you should have is, I'm going to buy 20 companies throughout my life. I need to make damn sure that every company I buy is a great company that's going to
Yes.
be here for years and is going to be better in 20 years. And I think
Ex-
if you're a long-term investor, that is the way you should think about things. Is you got a punch card with 20 slots on it, you better make each one count.
Definitely, I agree with that philosophy, and I think a lot of people, when they use him as the godfather or the allfather of diversification, right? But my understanding, what I've read about him and seen in interviews, is that he basically built up his wealth with only three companies, or his investment philosophy, when it's talked about it anyways, is that if he would only invest for his own family's sake, for their wealth, he would look at two or three companies only that are great, and that he would keep reinvesting for the rest of his life. Because if you find two or three great companies, and hopefully some of the companies we're going to talk about, like Very, is one of them. If you have really good companies, you're set for life if you keep reinvesting in them. But given his situation, I mean, he has millions of people who are counting on him. He can't play around with that kind of money and people's pensions, right?
He does. But like, one thing about Warren Buffett that most people don't realize is when you look at the Berkshire Hathaway portfolio,
Mm,
over 20% of that portfolio is in Apple stock. And usually it's closer to like 30 or 35%.
mm,
So Berkshire Hathaway, the godfather of investing, does not have an evenly balanced portfolio of 5% and 10% in each position. He
right.
has a very heavily weighted portfolio in the stocks that he has the most conviction in.
Yeah.
And I think that's one thing that might get misconstrued a little bit. But Warren Buffett has the majority of his wealth in a very small number of stocks.
Mm,
Even though Berkshire Hathaway owns 20 or 30 different companies,
yeah.
most of them make up a very small percentage compared to Apple and Coca-Cola.
Yeah. So what do you feel personally? Should you diversify? Should you have 20, 30, 40, 50 companies, or?
Yeah, it again depends on the investor, but if
Mm,
you're a long-term investor, I think you should focus on industries that you are familiar with and
mm,
that you know, and then are going to grow in the long term. Like me personally, I live in Calgary, Alberta, which is the oil and gas capital of Canada. And I personally do not invest in any oil and gas companies because I'm not a big dividend investor. And I don't think that the oil and gas companies are going to see exponential growth over the next 5, 10, 20 years. So I invest pretty heavily into tech. I'm
mm,
very familiar with tech. I follow these companies. I use their products. That's where my strength is. So I try and focus on those ones. Now, when it comes down to position size and diversification, you definitely need to have diversification. You can't have all of your eggs in the same industry. So for me, mostly it's tech, psychedelics, graphene, gaming, food. I got a little bit of cryptocurrency, but they're all industries that I know about and that
mm,
aren't directly connected. And so when it comes down to number of positions, it has to be a number that you're comfortable with,
mm,
comfortable monitoring, and comfortable watching.
mm,
For some people, that's literally 3 or 4 positions.
mm.
Like that's all they can take. That's all they want to watch. That's all they can monitor.
Yeah.
And me personally, I don't have much of an issue with that as long as they're in different industries.
Mm,
For me, my long term portfolios make up about 8 to 10 positions. is kind of where I'm at, and
Yeah.
it's heavily focused on tech, but it has other companies in there.
Right.
That's the number of companies that I like to continuously stay up to date on, monitor, read the financials, listen to the conference calls, check the press releases a couple times a week. Like,
Yeah.
I can manage 10 companies, absolutely no problem. If I get to 15 and 20 companies in my long-term portfolio, though, it becomes a chore and it becomes a hassle and it becomes too much time for me.
Yeah.
So I like to choose the kind of 8 to 10 companies that I have the most long-term conviction in.
Yeah.
Those ones go into my long-term portfolio, and then I keep my my extra money in my margin account to do the day trading and swing trading with.
Oh, I like that. That's a nice strategy. I have eight companies too, and personally, I feel I have too many. But eventually, like you talked about, actually, that if you're that kind of investor, I would only want to have two or three eventually with time, and preferably kind of what you're talking about there, that you haven't within different sectors, but you have the best ones, the 10x generational kind of company possibility. Like, I'm heavily invested in Tesla, and I think in the long run they are the best company in the EV sector. So there's no question about that in my eyes. And maybe eventually it might be one of the plant-based. I do think the plant-based sector is still very new and early, so I think you can actually be invested in several of them for a couple of years, and you'll see a lot of things happening there. But I still believe there's one or two of them that probably long term will be among the best, of course. So, but if you want to tell us about that, what's your three conviction stocks that long term?
Yeah, no problem. Google's definitely number one. I think
Mm-hmm.
Google has the best business model in the entire world. I don't think there's anybody that can say they make higher profit margins than selling Google search ads.
YouTube
So
is forcing you to say this, right?
yeah, you know what? YouTube pays the bills for me, but like without YouTube, I think Google is the best business in the world, and I think they're working on some amazing projects that we just don't know about. So Google is probably my highest conviction company. Second to that is Apple and Facebook.
Mm-hmm.
Those two are both kind of equal for me. I think Facebook is working on some projects right now, especially in the VR space and the metaverse kind of world, that are going to dramatically have a pretty big impact on how we do business and how we interact, especially over distance.
Yeah.
So I'm really looking forward to that. And Apple is the best run company in the world when it comes to financials and their products.
Yeah.
So like between those three, I think you couldn't really go wrong with that. Um,
It's just
the
a
other
shame when it comes to Apple. I have 10% of my portfolio is in Apple, and it's just a shame that there's for me. I shouldn't say that as a growth investor as well, though. But I wish they had a better dividends, considering. But at the same time, if it's a company you believe in, you don't want them to actually waste money on dividends. You want them to reinvest, and they put quite a lot of billions every year on research and development, which makes it a great company. So definitely.
Totally, yeah. And personally, I don't like the dividend. I'd actually rather them keep the money, because anytime they issue me a dividend, I'm then forced to pay tax on it.
Ah,
Either just keep that money in the company, because I don't want the cash flow right now. I don't need the cash flow, and it's just going to get reinvested anyway. So why pay tax on it? So that's my philosophy around that. But yeah, that those ones are up there. And then as of right now, I'm long term, like very 5-10 years from now, China is going to be the dominant economy. It might pass the USA, and I think China is growing and doing exponentially well. And as of right now, Alibaba and Tencent Holdings are just completely getting crushed and hammered, and they're falling lower and lower. And so I am watching those companies pretty closely for entries and adding to those positions, because I think over the long term, both of those companies will do extremely well. And I
yeah,
think they're going to compete with a lot of the American services that we have that are currently dominating right now. If you
yeah,
look at Alibaba and AliExpress, Their mission right now is to do 3-day delivery worldwide, which is going to pretty directly compete with Amazon's 2-day delivery, especially since the prices are dramatically lower. So
Yeah.
I think we're going to see the rise of China over the next 5 to 10 years. I don't think it's going to slow down.
Yeah.
I think right now, the industries are getting absolutely hammered, and I think if you're a long-term investor, it represents some buying opportunities.
Definitely.
And then the other company I'm pretty bullish on right now. I mentioned Amazon. I like Amazon. I'm holding Amazon. I'm also holding Shopify. I'm a huge fan of Shopify and what they're doing. They're a Canadian company, so it's kind of like a hometown thing. But the business model that they have is so well aligned with their customers that I think for anybody that wants to start their own business and doesn't want to sell on Amazon, I think Shopify is the number one choice.
Yeah.
So kind of covering both Amazon and Shopify gives somebody a excellent sort of stranglehold on internet e-commerce in North America.
Yeah.
And so I'm holding both of those right now as well.
Wow. It makes me jealous because I've always say that when I get my cash flow flowing a little better than now, we have a certain amount that we invest every month, or we basically do try to fix our lives so it can be everything about the investment, right? So we don't use money to go on vacation. We try to think about everything we buy. We don't care about luxury stuff anyhow. So we try to use all the money we can on investment. But since I still don't feel I have that kind of cash flow as I would want to have, I focus on less companies right now. But if I was in a situation like it sounds like you might be in, where I have a better revenue coming in every month, I would probably be in more larger companies like that. I would want to invest more in Apple. And I think I agree with you when it comes to Alibaba and Tencent. I haven't been following that much as you do, but the 2 cents I have about them, and when it comes to China as a culture and as a future economy, I totally believe that they will be the future. It just makes more sense to me, and I'm against uh, dictatorships and things like that, but I feel like the way they govern the country is probably more efficient. You don't have the kind of bureaucracy that we have here in the West, and that probably makes them a lot more efficient. We saw that with the Rona as well. So I believe actually they will, both them and India will do really well, I think, in the future.
Yeah, I agree with that, and I think like one of the factors, like you mentioned, is the government. They can just kind of push things through, and there's less sort of pushback from citizens, which is kind of a freedom issue there. But I think more so than anything, especially when you look at China and India,
Mm,
like it's the population.
mm,
If these people, if if in the next few years they accelerate to get to the same standard of living as North America or as Europe, just because they have 4 times the population, means that they're just going to be so much larger than anything else. I mean, China has 1.3 billion people,
yeah,
and the U.S. has 330 million. So like it's not even a close comparison. It's just that the GDP and Americans spend and consume so much more. But
yes,
if China accelerates and continues on the path that they're at, just the fact alone that they have a population that's 3 or 4 times the size of the next largest economy
yes,
or of the largest economy in the world, is just a powerhouse, and it's something that as an investor we should be well aware of. And
yeah,
if you're interested and okay investing in that space, you may want exposure to it, especially as Tencent and Alibaba get hammered over the last few months.
exactly. So definitely, and when it comes to, I'm half Indian, so I might be biased, but I mean, when it comes to the brain power from both of these countries, and India has been well known for years and years when it comes to academics, just like flying out of there. My understanding in the U.S. and I think in Canada too, you do have a lot of Indian academics, don't you? And a lot of doctors who are uh, Indian. So I'm not. I could be wrong, but
Yeah,
that's.
I would agree with that statement, and I think yeah, I would agree with that statement in general. And I work or I've invested in a couple tech companies here in Calgary, and we outsource almost all of our IT development, software development, and programming to India and
Mm.
South America. So
Right.
the tech and the talent and the knowledge base in India, China, and different regions around the world is the equivalent, if not better, to certain areas in Canada and the USA. But the advantage is that it's a quarter of the price.
Yeah.
I mean, to pay a software developer in Canada to build an application for you, if I wanted to start a business, is going to cost me $150,000 to $200,000 per year.
Right.
And based on the rates that we're seeing, we can pay about a quarter of that to somebody in India, and they live extremely well on that. And so it's a really interesting dynamic,
Yeah.
especially with the rise of the internet and services like Upwork and Fiverr.
Yeah. Definitely.